Nasdaq's making moves in the crypto and token space, plus the CBOE has Bitcoin news to share. Hey there, everyone. I'm Jenny Horne, and this is Crypto Corner on Schwab Network. We've got a lot to discuss, as always, so let's bring in Adam Lynch, director at Schwab Equity Research. Adam, we talked about the SEC and CFTC last week warming up to this space. Seems like the Nasdaq is ready to go, so walk us through the latest.
Yeah, thanks, Jenny. So this week, NASDAQ asked the SEC to let it trade clearly labeled equivalent rights tokenized shares as traditional stocks. This marks one of the most ambitious attempts yet to bring this blockchain technology into the heart of US equity markets. Now, tokenized securities are essentially digital representations of stocks that can be traded on a blockchain. Advocates for tokenization argue that these assets help deepen liquidity, support fractional ownership, and extend access to overseas investors. Now, on the other hand, regulators warn of legal and operational risks to the tokenization of assets. In fact, if you take a look at these, most of the tokenized shares to date have actually been issued by third parties rather than the companies themselves, just adding to the complications. In the filing that they submitted on Monday, the exchange requested that the SEC essentially amend the existing rules, including the definition of the security, to permit tokenized stocks to be traded in essentially the same way as any traditional equity. Now, it's important to note that this move goes beyond just a technical adjustment to how stocks are traded. It also addresses fundamental questions about how stocks are issued, defined, and settled. And the proposal actually comes amid growing demand for these types of tokenization real-world assets, with overseas platforms already offering tokenized shares of US equities and ETFs to investors abroad.
Okay, so sticking with the NASDAQ, they have become a strategic investor in a company that was founded by the Winklevoss twins. Tell us a bit more about this.
Yeah, sure. It's been a very newsworthy week for the world's second largest stock exchange. So earlier this week, they announced that Gemini Space Station, the cryptocurrency exchange, you're right, founded by the Winklevoss twins of Facebook fame, has essentially secured a strategic investor, NASDAQ, as it moves forward with plans for a listing later this week. If you're not familiar with Gemini, it's among the biggest US crypto trading platforms by volume. It holds somewhere around $20 billion in assets and has handled nearly $300 billion in lifetime trading volume. It operates an OTC trading desk, offers US credit cards, and supports a large range of digital assets like Bitcoin, Ethereum, and stablecoins. Now, the firm's expected to raise somewhere around $300 million in the IPO, but as we've said, they've already lined up NASDAQ to buy $50 million in shares in a private placement, which happens the same time as the IPO. This partnership will give NASDAQ's clients access to Gemini's custody and staking services, while Gemini's institutional clients will now have access to some of NASDAQ's products, like its Calypso platform, which is used to manage and track trading collateral. It should be a really fun IPO to keep an eye on, especially given the robust investor demand we've seen over the past couple of weeks with crypto-related listings like Circle and Bullish.
Okay, and from exchange to another exchange, the CBOE is planning to launch continuous Bitcoin and Ether futures later this year. What really does this offer for investors?
Yeah, this is going to be an interesting one as well. I mean, some of the fun stuff here is just how often we got new products being launched and developed in this space. So this week, CBOE announced plans to launch continuous futures contracts for Bitcoin and Ethereum, pending regulatory review, of course. Now, this innovation will offer 10-year expiration contracts, which are cash settled and aligned to real-time spot market prices on a daily basis through cash settlements. Now, the long-term nature of these new contracts essentially aims to simplify position management and provide efficient long-term market exposure to these underlying assets. But unlike the traditional futures, they won't require as much periodic rolling, which is a process that you need to do in order to reestablish the position. And without that rolling, it makes them much more cost effective. Now, another benefit for CBOE is the potential to attract both retail and institutional traders with enhanced clearing capabilities through an actual CFTC regulated framework. Now, here at Schwab, we're often asked, what is the best way to get exposure to crypto, given all the choices out there, like direct investing, crypto related stocks, crypto ETFs, all of that, right? Well, what is best is obviously going to depend on each investor and their unique circumstances. But these types of products appear to offer some substantial advantages for investors or traders who are looking for that long term crypto exposure.
No, absolutely. And I think there's so many different ways right now to get into these various products. It's I mean like entry level, just really you can go anywhere. I think that's been such a hugely beneficial part of all the reworking of this framework. So couldn't agree more. And thank you so much for all of that insight, Adam Lynch. That will do it for this week's edition of Crypto Corner. Be sure to like and subscribe to Schwab Network on YouTube, Instagram, or wherever you're tuning in. I'm Jenny Horne, and we'll see you again soon.